Welcome back to the channel, everyone. Today I want to talk about how institutions somehow own 115% of the AMC float. When I factor in that retail holds 90% of the float on top of that, that's a whopping 205%, unless my math is wrong. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Frecoin tweeted this extract saying combined, the top 108 institutional holders of AMC own 114.95% of the company with a total of 589.7 million shares. He then showed this screenshot from StockNinja.io that reads Vanguard Group Incorporated is the biggest individual institutional holder of AMC Entertainment Holdings, owning a total of 47.2 million shares. Combined, the top 108 institutional holders of AMC own 114.95% of the company with a total of 589.7 million shares. Now then, on top of that, you have to factor in that retail holds 90% of the float, which is a whopping 205% of the float, or over 1 billion shares. Now, I actually did some searching myself and managed to find that exact same extract here on Google, and it reads the exact same word for word, so that screenshot isn't photoshopped. Now you may say, Tom, that sounds like just another glitch, right? And yes, it may definitely be a glitch, but it's very coincidental that TD Ameritrade and StockNinja are showing the exact same numbers. TD Ameritrade is currently showing there is 1 billion outstanding shares of AMC for the entire float. Now we know that it's only 516 million, but TD Ameritrade is reporting 1 billion AMC shares trading out there right now. We know there should only be 516 million outstanding shares trading out there right now, but if TD Ameritrade are reporting a billion, that means there's 516 million legit shares and 500 million synthetics, if not even more. So it just seems really coincidental that when you take the 589 million shares held by institutions and the 490 million held by retail investors and add them together, you get the same billion shares. Now the 490 held by retail comes from retail holding 90% of the float. When you add 90% of the float onto the 114, you get 205% of the float, aka around a billion shares. Now Defiant tweeted saying he's seeing claims that Toots hold 121% of the AMC float. Now I don't know where this 121% comes from, so far I've only seen this 115%. But regardless, he said that he ran all of the 13Fs for every single institution holding AMC and came up with a total of 309 million shares held by institutions. And he said, so per the self-reported 13F filings, they hold 60% of the free float. And on top of that, retail holds 80 to 90% according to Adam Aaron. Now per the self-reported 13F filings, that's still 150% of the float, which is obviously way larger than the 516 million shares that should be an issue. And obviously a lot of this data is pulled from self-reported 13F filings, and therefore it wouldn't surprise me if there's institutions lying about just how many AMC shares they hold or how many AMC shares they hold through swaps, and therefore it wouldn't surprise me if the true number of synthetics is instead in the billions. But so what does this actually mean and why is it actually happening? Well, obviously it means there are indeed synthetic shares. Whether it's hundreds of millions or whether it's billions, I don't know specifically and I don't really think anybody knows. Obviously 205% of the float can't be held. Usually it's 100%, but when you add on top of that 100% the shares that have been shorted from one firm to another firm, those shares technically have two separate owners. Therefore, you would expect maybe 110%, maybe 120% to factor in that AMC short interest or that legally reported AMC short interest, but obviously we're much closer to like 160% or 205%. And why this is actually happening is because I think there's a few institutions out there that are actually reporting their true ownership to ensure they get the correct number of APE shares. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. Moomoo is currently giving away 13 free stocks, which is the most free stocks they've ever given away, valued up to a whopping total of around $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel. Therefore, Moomoo is brilliant for buying those AMC, those APE and those GameStop shares. Right now, I don't actually think that any APE shares have been delivered to institutions. Obviously, Webull is showing that APE is held 95% by retail investors and only 5% by institutions. Now obviously this screenshot is showing that AMC is held 114.95% by institutions, and this screenshot is showing 60% held by institutions, but both of which are significantly higher than the 5% of APE that's held by institutions. Therefore, it seems like so far institutions haven't received their APE shares, likely because they're not reporting their true ownership on the 13F filings. Therefore, it seems like these institutions are now starting to report the true figures so they can actually receive their APE shares. But again, what this does do is expose for all to see that synthetic shares do indeed exist. Adam Aaron now has factual proof that synthetics exist, as there's at least 60% of AMC shares, if not 115% of AMC shares, held by institutions and retail on top of that. And therefore, Adam Aaron now has this factual proof for all to see, and he can take that proof to the SEC and finally do something about it. Now on top of that, we're also seeing tons of different sources and tons of different figures for a varied market cap on both AMC and APE. Average Ape tweeted saying, "What is the real market cap for AMC and APE? The New York Stock Exchange is reporting $4.3 billion for both AMC and APE, even though the share prices are different. Moomoo is reporting $4.3 billion for AMC and only $2.6 billion for APE, obviously because the price is lower." Regardless of which figure it actually is, so far it just seems that all of these different institutions, these different trading platforms, and these different data providers all seem to have different data. Now obviously I think the reason why all of these trading platforms, brokers and data providers have different data is because they're all being reported different figures by different institutions. These institutions simply aren't reporting the true figures, or they are reporting the true figures to some entities and false figures to other entities, and that's why everyone's getting confused. Maybe these hedge funds are sending an email to the New York Stock Exchange titled Final AMC Share Count V1, and then later during the day they're sending a separate email to different trading platforms titled Final AMC Share Count V2 Final ... If you've worked in an office, you'll know that you typically save files as V1, V2, V3, V4, V4 final, V4 final final, V4 final final, V2, and so on. Maybe these hedge funds are getting confused exactly what figures they're reporting to which institution and which data provider, and that's why they're getting so confused, and there's so many glitches that have been happening over the last few months and the last few weeks specifically. And it seems like the mainstream media is already encouraging their customers to buy these inverse AMC short ETFs. And the really crazy thing is they're not even just suggesting their customers buy these inverse short AMC ETFs, but to also leverage up and take out margin loans to buy these ETFs. This is a screenshot, I think, from CNBC titled Betting Against Meme Stocks. They're saying there's 10 new single stock ETFs, obviously for shorting meme stocks. And they suggest to either use derivatives to offer leverage or inverse exposure. And they're also suggesting that new 13F filings are seeking bearish bets on companies like GameStop and AMC, which I for one find very, very interesting because short positions and swaps aren't even reported on 13Fs. But as I suggested in my video a few days ago, I do think these institutions and major banks are trying to shift their toxic short exposure on stocks like AMC and GameStop. Once they've shifted their toxic short exposure and built a net long position, they can then allow the squeeze and profit from it greatly. And it seems like that plan is already underway, as they're already advertising on the mainstream media for customers to buy into these inverse short ETFs. Now you may have seen that yesterday GameStop released their Q2 earnings, and Crystal Paul tweeted something very, very interesting. He said, "Wait, can GameStop be forming a new stock exchange that IPOs can come on to raise capital instead of being shorted to the ground?" He said, "Could GameStop be in the process of creating a transparent stock market or stock exchange?" Now there's a variety of different announcements that were made during this earnings release and have been made over the last few months that suggest this may actually be true. Ryan Rigg tweeted saying GameStop today announced that it's entered into a partnership with FTX US. The partnership is intended to introduce more GameStop customers to FTX's community and its marketplaces. Now on top of this, FTX just announced a partnership only a few days ago with IEX. Now IEX is one of the only transparent exchanges where you can route lit orders for your AMC shares. Now Bradley, the co-founder of IEX, posted on LinkedIn saying, "Big news at IEX today. We're excited to announce a strategic partnership with FTX US. Together, our goal is to help shape the future market structure for digital asset securities." Now on top of this, back in June, FTX official also acquired embed.com to facilitate clearing services, aka to clear trades with no fees or payment for order flow. So it seems like FTX and GameStop are trying to build a completely separate, completely transparent stock exchange, or maybe even a separate stock market. FTX obviously has this partnership with IEX and with GameStop, and FTX also recently acquired embed.com to facilitate clearing services. Maybe this is going to be a blockchain stock market or a blockchain stock exchange, which is going to be a massive step forward in the right direction for transparent trading and transparent stock ownership. On this separate exchange, there won't be any such naked shorting, and maybe many stocks and many new IPOs will move to this separate exchange. This is obviously something that was rumoured a long time ago, but it seems it may actually be coming to fruition over the next 6 to 12 months maybe. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.